we can start.
Good evening, everyone, and welcome to this edition of CII Startup Buzz. This is the 52nd edition. We are making a lot of effort from the startup committee at CII to bring to you every week something exciting, something relevant for you, something that will make you think about how to do your startup, how to approach your VC, what is the way to scale. We have issued tax issues, we have covered finance issues. We are trying to cover as many issues as we can. So remember, Thursday, 5 p.m., block a time. It is time for CII Startup Buzz. At CII, we are also going to start a mentoring program, which will get announced soon in the next couple of days. So keep your eyes and ears open. It will be announced on LinkedIn and CII Startup CII pages on LinkedIn. And of course, I'll be posting it again. So we have some exciting session today, and I'll leave it to Amit to moderate the session with a very exciting person and person with high energy, Pratik Agarwal. Remember, every Thursday, 5 p.m. online CII Startup Buzz. Over to you, Amit.
Thank you, Nanath. Really appreciate that. And hello to everyone. Welcome to the 52nd edition of CII Western Region Startup Buzz. I'm sure this is something that you all were looking for. As a precursor to this session, I want to let you know that all of you probably might have heard about many stories wherein a corporate individual, after working for many years, became a startup founder. You might have heard about stories, many stories of students becoming a startup founder. Today is a story about a corporate individual becoming an investor, right? Personally, I interacted with Pratik first time in 2022 for my own startup at that moment of time. I'm so delighted that we were able to kind of have some brotherly talks a day before. That was yesterday. So really looking forward for a lovely interaction, Pratik. Before even we kind of get started with questions, and I'm sure people are wanting to throng you with questions, it'll be very good to have a little bit of a story about where and how you got started. Pratik, you're on mute.
Thank you so much for inviting me here, and thanks to Nanad as well. We work on the same floor and we interact a lot, and that's how I got introduced to this. And thanks, Amit, for hosting this session for me. I hope we are able to answer all the questions from young startup founders. Second is that I think I've just been lucky, right? From starting and probably spending about 12 years, 12 companies in about 20 years, and maybe 20 profiles, and maybe 24 bosses, right, over that time. And every experience got something very unique. uh, right from moving to from telecom to agri, to financial services, then startups, and then eventually investing. And but one thing which I would say is that the kind of job which came to my table, right? I did it myself and then delegated it to my team, right? So doing that was one of the core things which got me to understand the problem statement, and then kind of build it out on from there. And obviously, reading books, hearing podcasts, listening to people who have made it in their own way and industry, that really helped me understand of how people think and how boardrooms and how decision makers act, which I kind of imbibed from them and put it to work in my own small little space, right? So yeah, this is eventually what got me right. It's only opportunities which I saw, risk which I took, and I keep jokingly saying, that till the time I was employed, uh, the HR guys used to really find it used to be uh, a blood pressure moment for them when they saw my profile. Oh my goodness, how do I find a job for you? You know, you're moving out every 2 years. The maximum I would have stayed in a company was 3.5 years. Right. So yeah, I think enough of me. We'll probably let Amit because I'm sure you have a lot of insightful questions, considering the
Absolutely.
audience is young and hungry to kind of take the bites from this session.
I think fair to say that you possibly jumped and rode like Vaibhav Suryavanshi is doing in cricket. So you did it in the corporate world. So my heartiest congratulations for what you've already achieved and what you're going to achieve in advance. But it'll be interesting for people to know what were the things that you considered, right? As you transition from a corporate employee to the role of an investor, a full-fledged investor. I understand that you transitioned from some of the established banking and financial services companies to fintech companies and then went into the investor space. But more specifically, what are the skills that you developed which gave you a jigra enough to be going full scale as an investor, and what are the things that you put at risk?
So very interestingly and very important question, right? I think you would appreciate that 12 companies had different decision makers, bosses, uh, and the leaders who probably wanted to had some view of how they wanted to build their corporate, right? And I think what I used is is not what they were saying, but how they were reacting to a slide, how they were reacting to an issue, how they were reacting, and what really made them take those decisions, right? And that background of how they were thinking around it developed. So while I was in a company called Bajaj Finance, right? What took those decisions and where that company is versus probably a fintech company at a later stage
Yeah.
or an agri-tech company, right? So I think I really got into the psyche and the mindset of the decision makers, in the boardroom, and that got me to really understand of how they think, why do they think so, and what is the risk versus returns, and how is that risk being mitigated. And something which I
Yeah.
saw consistently is people talk about risk, right? But people don't talk about, so it's there is a maths to the madness, right? And every risk which you are taking, right, is not a blinded risk. It's supported by certain mitigations, right? And where does that comfort level come to take those risks is what I learned from these personalities.
Lovely. So you said maths to the madness. I can understand the maths in terms of, before you moved on, you kind of possibly accounted for, in a few months or a couple of years of funds with you, how would possibly family members and some of the expenses. But what was the madness you did in terms of decision making, right? What all did you put at stake in terms of I'll sell this or buy this and stuff like that?
So I think my madness also was very much calculated madness, right? So at one point in time, I felt that I need to get into entrepreneurship, and I quit my job. Right, I started up, and the biggest madness, which I would not say that anybody should do, is take a personal loan to run your expenses. Right, so that was one of the madness I did, right. But that was supported by certain things that I have always given it certain time period, right? Where इतने टाइम में ये होना चाहिए, अगर ये नहीं हुआ तो I am a pro risk taker who would just book the losses. And I have learned from all the leaders in my life, that backup ka backup hona chahiye, right? So I already had a plan B as to this is something which I'm trying, right? And this is what I can put at stake. But if it doesn't work out, this is the timeline I'm giving to it, and I will do this if it doesn't work out, right? So, and constantly analyzing, constantly evaluating, constantly doing, re-evaluating whether your decision was right or wrong, right? And that is something which helped me also look in a founder also. So I think since the audience is more of a founder as founders, right? And I can see some chats around it. I also see in the founders that what is the timeline they've given themselves, right? So a founder who's so much in love with their startup idea or the company or whatever they're building, right? They just keep going on for 2 years, 3 years, 4 years, right? And there is no end to it. So I think you have to put a stop loss.
Yep. Okay. So there's a views and perspective about it, and we'll try to bring it out in the open. I understand that you are absolutely glued on to a very Bollywoodish line which says, "मैं धंधे के साथ बंदे में भी पैसा लगाता हूँ." Right. On that note, we will talk more about, a little more about what is Growth Cap, which is your respected firm. What is your investment thesis or philosophy?
So Growth Cap was built on thesis. So just a background that after Bharat Pay, I moved on in 2020 to really think that a 12 jobs ho gaye. What is it that I want to do for next 10 years? Every 3 years,
Yep.
I think I'm moving jobs, looking for something challenging, want
Yep.
to build something, make a
Yep.
name, get into that 40 under 40, get into that
Mhm.
certain threshold of itni salary honi chahiye, all of those, right? Jitni tumhari एज है उसका 3 गुना आपका कुछ सैलरी होना चाहिए and all of those things, right? And after I moved on, I started advising startups. I started investing smaller amounts in them, and ended up investing in about 30 odd companies. The good part is, again, I got lucky that most of the companies, 75-80% of companies survived, and they are kind of returning capital, right? And the exits I got from my very, very early investments, which is pre-seed, seed, or the maybe the first check as an angel investor or a syndicate investor. That gave me that confidence that you know बंदा बहुत important है, because धंधा तो बन जाएगा, and it will come through challenges and the kind of regulated entities which I used to like, right? Um, will have headwinds, in 5-10 years. But looking at the success story and why I put money in whom I put money is what Growth Cap is also all about. So whatever I did in my personal investments is trying to replicate in the fund and the institution way. Yeah, I mean, first is the founder. uh, Second is why he's building what he's building, what is his skin in the game, right? The fourth is, what are the kind of people he's able to attract, manage, to convince, right? Because and this is just a start, but the final turning point of investment is, how do I see this guy 5 years down the line? Right? Whether that guy will be able to manage a 10x growth company, right? So if you're investing at a 20 crore valuation, will he be able to? How do you think whether he'll be able to lead a company when it's 500 crores? Right? And what are the smart hacks he would have done? So somewhere like why do people hire CTOs, right? Because that takes away a lot of your expenses and building a tech team. So is your CTO a founder? Is he a co-founder? What is the equity you have given? What is the skin in the game he has? Tomorrow, if he gets a better offer, will he kind of just move out, right? So I think these are all the softer aspects of why this guy, right? And because as a VC, you will make money only in the third, fourth, fifth round, and over 4, 5, 6 years, right? So you have to maintain that relationship. You have to stay put, you have to support him, you have to help him grow, you have to grow along with him, and only then you will be able to make money. So all your bets, whatever you take right now, right, will only come to life uh, only after 5 years. So I think all of these things play a role, equally. It's designing a right, right dish in a fine dining restaurant.
True, true. Very well said. Very well said. The whole summary of it is how you define your whole kind of a right dish. I have a lot of questions pouring in right now, and I'll jump straight to them. We're already 15 minutes past the start time of the session, and looks like we are about to hit the record number of people who have joined the session today already. So the first question that poured in over here was, what metrics should an early stage startup focus a founder on a founder should focus on before raising funds, and you can be as succinct as possible, Pratik, on this one.
So, founders, so there is no right rule. There is no one size fits all, right? It is multiple things, right? So if the founder is a 2x founder, has been there, done that, been there, right? And the approximation of success is highest, right? You can raise even at an idea stage,
True.
right? But if you haven't done that in the past, this is the first time, you're just out of a college, or you're out of a 15-year journey or a 25-year-old job, right? What are you building in, right? So if you have spent time in FMCG, right, and tomorrow you want to build up an NBFC, do you think investors will trust you with it? The answer is no, right? Otherwise, if you are an NBFC, financial services guy, or a banker, right, and suddenly you start selling cookies, or you want to make a D2C brand, do you think you'll be successful? The answer is no, right? So I think you will have to really figure out of what are the metrics, what are your odds, what are your events, and accordingly decide. Because once you go out in the market, people are going to judge you, and it's all about the
True.
storytelling as well.
True, true. Very well said. Market will judge you, right? Irrespective of whatever you have been, even if it's 30 years of experience. And you very wisely said that relatable skills to what you're trying to build. And more importantly, how are you going to acquire and service customers, right? Very well said. The other one is, how do investors evaluate startups that are still pre-revenue?
So again, I was telling Amit that revenue matrix is just one of the matrix, right?
True.
Pre-revenue, post-revenue, it
Yep.
really doesn't matter,
True.
right? Your job is to build a highway,
Yep.
and people should use that highway. And revenue is just a toll, right? You can put the toll if people are using it, and people don't mind if there is value add in their travel plans, right? And you can see in multiple tolls. First it was 50 rupees, then it was 75, then 100, right? And now maybe 200 or whatever. The point is that if somebody is using what you have created, and people are getting
Value out of it. Yeah.
yeah, so people will start paying for it,
True.
right?
Yeah.
And you can do all those testing, trials, errors, all of those, that whether this is a product market fit. So this is all in PMF, right? But I really don't care. It's pre-revenue. What I really care is, what is the possibility of success with this guy, right? And can I track his last 10, 15 years journey, right? And it's very easy now to really track people, their past references, right? The ecosystem, because as people again say, right, your network is your net worth.
True.
So how well connected are you? Because once you become a founder, you will have to sell. You will have to be a good salesman to sell your product. You can't be sitting inside your office and expect that people would know. No, your product need to reach the right audience, and for that, either you, your co-founder, or something. And we are not averse to that. You should be doing everything, right? You please hire a right team, get your right co-founders who complement, and just not overlap.
True, true. The founder credibility, the product credibility translating into, customers coming, using your platform and paying for it. I quite like the way you said that, uh, an example of the highway. The highway could be just users, but when people start paying toll for that, do they really become the paying customers? right? The other question is how much does storytelling influence investment decision? I think the writing is on the wall on this one, but I'll still let you recap that.
So storytelling is again, it's like depending on the person, right? Depending on who's evaluating you, right? And how much does that person know about your product, your ecosystem, and you, right? Most of the times, there are a lot of boring pitches where the founder is just not able to communicate and storytell and create a larger picture. But we on the other side are operators and we understand what he's trying to do or what he's coachable at, and probably we need to invest early. Let him, I mean, teach him how to storytell and do some role plays and stuff over a period of time, right? So I think it has to be tweaked. It has to be a match made in heaven where you end up meeting a right investor who understands your position and you also, right? And normally this issue happens when you haven't done this role plays with your closed ones. You haven't really practiced it well. You don't know your own product well. You are a great builder, but in the background you haven't really gone out in the market. So I think a fair amount of preparation, right, is needed before you go out and raise money. Do it with your own early stage investors, your friends and family, the people who give you the worst feedbacks or the most rude feedbacks, right? Most of the times I've seen that early stage founders are so much in love with their own product that when they hear uh, uh, you know honest opinions and honest feedback, they just don't like it, and they close the doors that, hey, you don't believe in me and I'm not going to come back to you. No, that's actually the reverse you should do. The people who give you, I mean, my team, we are in the business of risk, right? My team, when they come and pitch me and something fancy, I'm like, Listen, you're not selling me this, right? We are in a business of risk. Our money is going to go, right? So you tell me only the negative points of what you have observed, right? So I think all the founders need to shift that mindset, and this is only out of my experience, nothing in particular.
Yep, exactly. So it's almost like both the movies and the armed forces, right? The more you train or more you sweat in your training, the better is the result, either at the final movie or the wartime, the chances of bleeding are very less. Um,
Absolutely.
and you quite nicely narrated. I like the way you kind of very beautifully said I am in a business of risk taking, risk management, right? So tell me how much exposed I am on the risk rather than trying to sell me a story that how beautiful it is, right? So good way of narrating
Absolutely.
it, yeah. I have the next question is what is the ideal way for founders to prepare before meeting an investor?
See, at our times, we didn't have ChatGPT and Claudes of the world, right? But if you just train yourself, pick up a couple of, prompts, right? And say, upload the deck, say, I'm trying to do this, tell me 15 toughest questions which an early stage investor or a family office or an HNI would want to value add. You can also write their personalities or upload their LinkedIn profiles and say that, this is the guy I'm going to pitch to. Tell me 15 different questions. So we didn't have all of that time, right? These are all come in just last one and a half year. So I think you have everything. You just need to be smart enough to write the prompt. It's a genie, राइट? अब जिनी से आप क्या सही क्वेश्चंस पूछ लोगे, which is in limited credits you get the maximum output, is where the game is.
True. I'll take the liberty of kind of adding to what you just said, and you said it very nice that there are tools available to prep you up, and there are things which are the right things or the right ways to pitch. But my experience, whenever I've interacted with both the founders, given that we also invest in startups, is the most important thing that we see through the founders is authenticity. How authentically are they trying to pitch their story, or are they kind of trying to get you straight to the blue sky thinking mode, or ye bhi hoga, sitare bhi honge, tare bhi honge, and stuff like that, right? So I do see some of the respected participants are sending their business pitch over here along with their mobile number and email ID. I highly encourage that you either route it through the CII, or maybe if you would like to, Pratik, guide them to where they can submit their business pitch if at all they want to pitch to you.
Yeah, we are a fintech, deep tech, and AI investor, right? Fintech covers payments, lending, infra, everything. So you can pitch it, send your pitch decks at pitch at the rate growthcap.vc, right? Or you can just visit our website growthcap.vc, and there is a pitch section, and you can fill up the form and reach out to us.
Yeah. So all the founders, all the students, all the established business individuals or businesses, you could possibly route your pitches to pitch at growthcap.vc, or maybe visit their website and submit it over there, right? We will not be taking any of the pitches over here, but I highly encourage all of you to raise as many questions as possible. Some really big ones have been already addressed and more coming our way. The next question is, what are some signs that a startup is ready to raise its first institutional round?
See, there's nothing called as an institutional round or something. We are in a business of risk, and we are in a business of making money, right? If your idea is great, you guys have displayed that you are the ones who have the edge, and you are here for a long haul. And along the journey, you have displayed that this is the only thing you want to do, and you don't have a side gigs and side jobs and all of those things, right? We are the guys who will chase you. We will reach out to you via LinkedIn, via DMs, via friends, via early investors of yours. So, see, institutions also need a great startup founders and teams where we want to invest in, right? So uh, it's again matchmaking, right? So I don't think so it's just one way. We also keep looking at, and we are after, I mean, today as we speak, right, I am after two startup founders that, guys, when are you raising money? Please take check from me, right? But they are taking some time. So, and whereas there are another 150 startups who are writing, chasing again and again and again, right? So I think it's important that for a startup founder also to research. See, please understand at early stage that not every VC is the right VC for you, right? You need to research. You can't pick up a email ID of some 150 VCs and just send the pitch deck to everybody and get in their inbox. No, it's just waste of time for you and them, right? So I think you need to also figure out that who's the right VC, what stage, what check size, what is the value addition they can do, right? Because once you are invested, your problem becomes our problem, right? So introductions, helping you out, connect, hire, everything. What is your job, right? We are here to help you. So it's not just one way, right? And that's where the maturity of the founder uh, comes, right? And how well prepared are you to raise money? You have to find innovative ways to reach out. It's always a great reference. If I want to reach out to a founder where I know that founder will listen to me or spend some time with me, right? I reach out through my LPs, I reach out through a common connect, I reach out through reference. There is nothing which is underrated, which is referencing, right? So you find a right reference who has a right influence, and then you have a seat on the table right the first time without trying and chasing for 5 months, right? But once you are there, are you prepared enough to close the pitch on the table? Is something again comes to your preparedness.
True, true. And very right correlation with matchmaking. Just because on the other side there's a person available for marriage does not mean that necessarily they are the right one for you. And absolutely well corroborated with the thought process that you brought in, that referencing is a much better and credible way, right, to be on the table and probably bank on someone's credibility than to be trying to find out your way through an absolutely abstract cold way, which is also something At times is needed, but referencing is definitely something that helps.
Yeah, yeah.
Uh, uh,
I don't want to rule out the cold emails, right? But cold emails, the success rate of a cold email versus a success rate of a warm reference and an introduction is way different.
True, true. I have a lot of questions pouring in, so I'll try to keep it as quick as possible so that we do not disappoint the so many lovely viewers today. What are the investors really looking for during due diligence?
Everything, see, due diligence is purely about whatever you have said. Can you justify and do you have a basis for it, right? So so due diligence is as simple as that, right? Whether your expenses, whether your commitments, whether your office rents, salaries, data, everything, whatever you have said at the time of pitching and during when you made somebody excited to invest in you, right? All of that should be true. That's due diligence.
True, true. Really validate with hard facts, documents, and possibly as much evidences as possible.
Absolutely. You can't pitch saying that during that pitch time you had 10 customers, and the moment there is a due diligence, you say, hey, I actually had only 8 pipeline. Those were not my customers. Sorry.
Yeah,
You
true.
know,
There's someone just quickly interested in your ticket size. And is there any limitation? Do you want to make it quick on this one?
we invest up to say 4 crores in the first check and then the follow-on rounds, right? And we are fairly fast. If you have all the data, everything, we can close the deal in less than a month's time, depending on how prepared you are, right? But again, we have evaluated about 1,300 startups to write 7 checks, right? So we are quite choosy about where we invest, but again, it's all about building relationships as well, right? Maybe you're not the right founder at that particular time, or you're not the right time where our fund can really take that risk, right? Because eventually we have to return capital to our investors.
Makes sense. Makes sense. This question is almost like you know, I won't even call it an everyday mood. It's like an hourly mood that I keep hearing. How do investors view solo founders? So it's a whole story about, do you really need a co-founder?
Okay, so yes, you do need a co-founder, right? You will realize this as the company grows, right? And if you want to add a co-founder, see, we are all humans, right? It's typical behavioral science, right? That you start up, you do all the running around for 2 years, first 2 years, and then you get a co-founder, and then he comes, hey, I'm coming after 2 years, but I'm value adding so much, and that's where you need me. So I'm going to take away 30% of your equity. And that's where the human behavior comes in, where you will say, hey, why 30% equity? I'm going to give you only 10% of equity because I have built the company. And that's where it is not about the company, it is not about the company's future, it is just about personal equation where somebody feels that they are worth that much, right? So the best way is to get a co-founder right at the start, and as institutional you get, it is all about, you know, key man risk, right? What happens to the company, what happens to the investment if something goes wrong, right? And that is where I think it is good to have a co-founder, but it's not must to have a co-founder.
You've invested in any company with a solo founder,
Uh, uh,
but a strong leadership team?
Not really. I don't think so. I've invested in a solo co-founder. I've always invested in a co-founder who has lot of insights, but there is also a backup, or there is somebody who's supporting, and that is one of the underwriting criteria also, that are you able to attract talent, right? And there are certain businesses where you need a solo co-founder or you need multiple founders, right? And there is no proof, there's no use case where either of them is wrong. Everything is good, right? But it's just that for a first fund, I don't want to take risk with a solo co-founder,
Got
right?
you.
And I'm not even saying that I will never invest. Maybe that solo co-founder is amazing, right? And I'm ready to take that risk because the upside just seems very logical.
Makes sense. Makes sense. Yeah. I hope it clarifies to everyone for their anticipatory questions too. How can startups prove credibility when they are just starting out? Now, This is like basic, but over to you.
So startups, it's not about proving credibility, right? It's the founder credibility,
True.
right? So your company's credibility is nothing at an early stage, but it's your credibility. And what is again, network is net worth, right? So when do you choose to start up and why you are choosing, right? I think most of the times we've passed on the opportunity because the founder is actually not a founder material, right? He just either has, uh, you know, uh, either doesn't want to work for somebody, right? Or it's a side gig. He's pretty well off with his family, family office and things, and this is a side gig for him, right? Most of the times we have seen that. Why are you doing what you're doing? I think that is the question we try to find out in the first few interactions.
True, true. And I'll take liberty to probably add in, for all those younger ones who are just out of the college or a few years into the industry and setting up a startup, just rolling out, say 1,000, 2,000, 3,000 surveys and extrapolating the report as a graphical result is not something, it's a good data point to have. It's not how you prove credibility. Closer home, for example, I jumped into startup in 2018, but allow myself 2 to 3 years just to validate, revalidate, and pivot in the POC stage itself before I formally floated a company in 2022. I'm saying that was my view. Your view could be different. But when you come to the investor, come with some hard set of data points, some solid traction that you have been able to demonstrate with very basic minimal investment, which is how you prove credibility that as much as you value your time and money, you would value investors' time and money too. Okay.
Yeah. Yeah.
What role does AI and technology adoption play in attracting investors today?
Up to your imagination.
True, true, true. Really true. I mean, there's no benchmark to it, right? I mean, it's as big as you can be. Yeah.
Absolutely. What kind of prompts you write, how deep are you in it, how you can really use this genie is totally up to you. I'm still learning.
I agree. I agree. We'll move over quickly to the next one. I think we've just 7 minutes left. What should founders prioritize in the first 12 months of building a startup?
First 12 months. So I think see it's all about before you start up, I think you should have a clear view of what you want to do for first 18 months, right? It is think about a movie, right? A movie is not made where you don't know where what are your locations, what are your expenses, like where are you going to shoot, whom are you going to hire, what is the cost of the production, what is the cost of the actors, what is the overhead cost, who are the distributors, everything. So when you see a movie, right, it is only after it is released, but what is gone in is multi years, multiple spreadsheets, a very clear डे टू डे प्लान. आपने सुना होगा
Hmm.
बहुत बार के ना एक्टर्स के डेट्स नहीं मिलते, राइट? उसका मतलब क्या है? उसका मतलब ये है कि ऑलरेडी आपने पूरा शेड्यूल प्लान करके रखा है. सो ये स्टार्टअप इज जस्ट लाइक अ मूवी, right? You have to have a next 18 months plan. You have to mature startup founders actually prepare what they want to present 6 months later. And the deck is ready. It's just about the time when you want to execute it and you want to deliver that, right? And that's where the confidence comes that I'm going to do this and this is my plan. So it all comes to preparedness. There is nothing where you say that कल से मैं स्टार्टअप फाउंडर बन जाऊंगा, एक डेक बना दिया मैंने, एक along the way I'll figure it out. No, you should have a clear cut map of where are you starting, where are you going, what is the route.
True,
Eventually there will be issues and hurdles and you will have to change the route, but that's the game,
true,
right? That
true,
will
true.
come, but you will have to have a plan and then you please start.
I am a big believer of plan and sometimes over plan, but Couldn't agree more than this. And the way you narrated that you need to find a route, I'm assuming that you also meant that with the route includes how you're going to fund it along the way, right?
Everything.
Yeah, I mean, and any startup founder who has this vague sense of imagination that they will set up a company only with someone else's money possibly has missed the point that as an investor, if I can't see you putting your stake into it, then how will I get confidence that, you will value my money enough, possibly? I think there was a question around it that banks don't give to the young startups, and investors are kind of jittery. So how to fund it from? Should we fund it from a pocket or go to NBFCs and stuff like that? Maybe you can make a quick one on that one, please.
No, so one is, I think wherever the question is coming, it's a wrong platform itself. The thought process is
Yeah,
incorrect. You can't take debt to fund your
true.
startup, right? It is equity money, it is high risk capital, right? And people who understand this ecosystem and value and are prepared that this is not a short success story. It might go down. You might have multiple challenges and you might lose the money, right? So this is for them. So I would say that, you can't. So NBFC doesn't come into picture, banks doesn't come into picture, right? It is pure play equity money, which you should be raising from people first who are value adding. These are HNIs, friends, family, or your early customers, right? And as I said, we are all, everything is human nature, human behavior, human psyche, human mindset, right? If you promise somebody that I'm going to double your money overnight, right, he will ask for four times. So it's a typical human nature, right? So I think people who believe in your idea and what you wanting to build, right, that's the first capital, and then automatically institutions will come as and when you get better at your numbers, better at your traction, you have a team to show, you have. So how many co-founders are there? That's also a multiplier of how many co-founders or founders reach out to how many investors, and you can raise that much of capital in the start, right?
Makes sense.
So debt is a no-no. Equity is the only way.
Yeah. Thanks for making it so elaborate. And that was a very pertinent one. I think a bit sensitive too, sometimes when people go overboard and start to burn themselves. So thank you so much for explaining it. I think the next question is more about, uh, you know, I think my aftertaste of it, that this respected founder or respected individual possibly needs a mentor, because it's a very, simple legal question saying, do you see LLP companies would ever be eligible to raise? I think don't waste time thinking about speculation. Open up a private limited just below the LLP and go for fundraising. Transfer the assets, transfer the customers to the private limited. You possibly need a mentor to help you in this one. I'm just conscious of time. We have just got 1 minute left. So I'll make a quick kill in terms of the quick fire questions. The first one in the quick fire is, uh, even if the investor pitch, the startup founder pitch, sorry, doesn't match your investment thesis or your investment ideology, but the founder is rock solid with proven record, would you still invest?
I would not want to invest because I normally don't do any personal investments in India anymore after the fund, right? But if the founder is great, I mean, if I'm able to make money out of this founder, right, or this startup idea, right, why wouldn't I want to invest through the fund? And if for whatever reasons, through to sector thesis, or we have closed the fund or whatever, we can't invest, I would love to introduce you to my ecosystem of founders, VCs, whoever are the right people who might be the right investors for you, right? So we do that every day.
Lovely, excellent. We're just about finished on time, Prateek. But given the fact that there was an initial delay of first 2 minutes, I'll still take for the last question, and after that, possibly respectfully, adjourn the call to the next week. Top three areas which you think will be investors' paradise.
Uh, I have to think over for a minute, but see, a lot of things are changing with AI now, right? And the focus on deep tech. So anybody who can institutionalize or rather build a services piece on the AI platforms and kind of the old boring ways of doing things, right? And the new ways of doing things. I think there's a lot of money in India. Second is that there has to be an edge. So there has to be some IP of why you, right? The third is the secondary market is getting hotter and hotter day by day, right?
True, true.
Unlisted equities, secondary market, right? Most of the investors are public markets, equity traders, right, or investors. So I think that market still is a big one, right? So there and fintech. So every 3 years you have technology layers being created. If there was no UPI, there wouldn't have been the entire new age
Fintech,
of
yeah.
lending, fintech, payments, etc., etc. So I think it's it's about, you got to read, you got to see the future, you got to see where the ecosystem is investing and what all businesses can become the next big thing in next 3 to 5 years, right? And then is this the founder who has the relevant experience, maturity, mindset, and the initial team building? And then, wherever you are starting, are you the guy who can take this to 5x also, not in terms of valuation but managing such companies, right? So I think that's pretty much. So it keeps changing. If I even say two three sectors, two three ideas, it won't make sense.
Very, very powerful. Very, very powerful. I'll recap for everyone who possibly didn't get it because, I was kind of hearing each and every word. The investor's paradise, are you able to build an institution? Number two, do you have certain kind of unique IPs or potential for great IPs? Number three, are you able to build something which will tantamount to legacy building out of current or future ecosystems, right? I really, really appreciate your taking our time, Pratik, to talk to us. Very, very inspiring journey of your own. And more importantly, I absolutely adored the energy that you bring to this room. Thank you so much for taking our time, and thank you to all the participants today. Greatly appreciate.
Thank you, Amit. Thank you, Ninad and CII for inviting me. Lovely to have
Take
you.
care. Have a good
Thank you.
evening, everyone.
You too. Bye. Take care.